Hello, hello, hello. What's going on, everybody? Welcome now. Stock Trades. How's everybody doing? Right now, that we're currently recording in the afternoon. Usually, we've been doing night recordings here in my father-in-law's house. This is the party room. Very beautiful and elegant architecture. Um, all imported from Versailles. So that's really cool. Personally, for me, if you ask me, I've never been to Versailles, and now I would like to go. Right. Well, I guess I'm already here, right? So shout out to my father-in-law. Started from nothing, worked his ass off, and yeah, it's exactly what we're doing here, right? We're putting in the work, we're doing research, right? And we're coming together, and most importantly, we're putting God first in everything that we do. Okay, all right. So with that said, we're gonna go ahead and we're gonna look at the JP Morgan Healthcare Conference. We're gonna listen to it together as a team, and yeah, what I yeah, we'll go from there, and yeah, we'll go ahead, just get straight to it, and then we'll kind of rehash what we said yesterday. But I recommend watching yesterday's video because I do an intrinsic value calculation. Okay, and yeah, all right, that's pretty much it, guys. Let's go ahead and get started. First, let's Clove, what's going on? Hey, how's everybody doing? 2036, new drinking game. It takes a shot every time Al says AI. Oh man, I'm AI. There's your three right there, right? Let's go, Al. Let's go, or let's go AI. Oh, there's a fourth one, right? What's going on? What's going on, Lourdes? Yes. Can't watch it, but we're gonna come back. Oh, come back. Yeah, no, we're here, baby. We're here. Just be safe. If you're driving, or working, just do your thing. Or drink when he says it is what it is. It is what it is, right? Or what other words do I use a lot? Essentially, I need to stop using that. I'm sorry, guys. It's just everybody has their weaknesses, right? He must have has one of those Al's Cups coffee. Damn, Al. Got me effed up on this drinking game. I know. AI. Just kidding. Right. Let's see here. All right. So let's get us started. Let me just fix this here. Sadly, I'm going to say it again. I have this AI tracking camera, so I'm going to just turn it off because it really makes me dizzy. It just makes me really dizzy. So we'll go ahead and turn it off here, guys. Yeah, let's go ahead and do that. Are you off? Stop moving. Okay. Stop. Just turned off. All right, so let's go ahead and open up the double screen. Drink when Michelle has to turn off the AC down. That's Michelle, turn off the AC. Well, actually, you know what? With this house, all I have to do is say, hey, house, lower the AC, and then excellent. We have a beautiful housekeeper that comes in and does that. So it's a little different here, guys. It's a here. This is the Beverly Hills, I guess. It's a different. This is the different lifestyle. But over there, we have to turn off and turn on our own ACs. But it's okay. It keeps us humble. I'm just messing with you. All right, so let's go ahead and let's have some fun and do some research. Yeah. All right. So yeah, first off, before I do that, let's look at the stock price. $2.70. If you go ahead and look at the 5 days, up 6.52%. Year to date is up 11.83%. Now, what I want to do is just look at the stepwise function. It seems as we are making higher lows. So we'll see. Now, what I wanted to do is I wanted to open up. This is the terminal here. Again, with lifetime access, you not only get lifetime access to our stock terminal, which is like the best in the West, in the East, and in the South, and the North, but you also get access to third-party softwares, like, for example, Tradealytics. If you were to get access to Tradealytics, it would be $69 a month. But I get access for everybody, and I give everybody this access. And it's just something that I really enjoy. He's a scientist. I like what he does. And I incorporated in the Discord stock terminal, and I just want to make people happy. I want to make we have the best data. So with that, we'll go ahead and do Tradealytics. We'll open them up here. And again, this is something I don't have to include, but like I want to, because it adds value, and it's going to make my lifetime members better, smarter, and better. So yeah, so Algo Flow, let's see because remember a couple days ago, Algo Flow, if you watched it, it showed the stock was going to go up, and it did. Well, actually, I just did it right now, guys, and I don't want to like burst your bubbles, but I went ahead and did it. and it looks like algo flow is kind of coming down. So you remember a couple days ago, algo flow went up. You can see the graph. Algo flow started increasing, but the stock was going down. This was called a bearish divergence, right? Or sorry, a bullish divergence, right? Meaning that the stock price is going down, but the algo flow is going up. And obviously, what happened? The stock price shot up, right? Well, now what's happening is we're starting to see kind of a bearish divergence, or algo flow is going down, but like stock price going up. So I'm expecting, the stock price to pull back, which is exactly what's happening. The question that we have to ask ourselves, how long you been live, Al? No, I just started. I just started. Yeah, no, yeah, yeah. Or better, how long have you been alive? Hey, Rapala. Oh shit, I just saw your message. Just trickled in. Triple Dragon, baby. Yeah. You see, it's Triple Dragon out in the world, but in the Discord we call it something else. We call it a triple. B Rob, you can say it, right? I can't say it. Yeah, yeah. But yeah, no, we have a good time, guys. It's this is what it's all about, isn't it? This is what life is about, and it's fun. It's fun. Everything's fun. Um, IWM. Oh no. Damn it. Okay, IWM. I don't want to move that because I drew this. I drew these lines like a long time ago, right? So as you can see, I'm expecting some pullback from the Russell, and that should give us some consolidation for Clove, and so I don't know, or if it breaks out, then we have a breakout. But I think January and the Federal Reserve is not going to be decreasing interest rates. I think we should have some form of consolidation with the IWM based off of the RSI, and but we'll see if it breaks out, then that's a whole different story. We're pretty much at all-time highs right now, guys. We've never been this high before in the history of the IWM in the whole world, right? So there's that. So with that, if we go ahead and go to Clover real quick, you start to see we had these touch points here, a touch point here, and a touch point here. So we have some support at the $2 and 30-cent region. And Vivek ended up buying around the $2.10 region, $2.14. IWM all-time high, Clove at lows. Well, the thing is, you have to look at it from the year-to-date perspective. Year-to-date, Clove is actually, I believe, outperforming the Russell 2000 from a year-to-date perspective. It's like different weird ways to look at it because, like, it's hard to, because Clove was burning cash from before, so it's hard to make that. But we are starting to see these touch points, and then now, if we were to go to the hour, you're starting to see this weird thing here. I don't know, right? If this is gonna be satisfied. I don't think it should. Personally, I don't think it should be satisfied until we actually become profitable. But I'm expecting that we get another pullback to 260. 260, maybe about 260, just a touch point. So we should go down and just kind of consolidate. The MACD shows it's bearish. So we should get some consolidation. But again, guys, there's a lot of volume that came in. And the last time we had this crazy volume was when we had the selling volume back in October when the stock price was $3.90. So a lot of volume is coming back right now. So we'll see. And then the stock market is future prognosticating. So all we really need is just to see what Q4's future guidance is for 2026. And that should tell us how much net income. And what I'm expecting are really two possibilities, like either the stock goes up or down, right? But the question is like, what are the reasons and what are the reasons for them to go up or down? So based off of this, I would say, I mean, for the the reasons for it to basically go down is just because it's a bad quarter. But this quarter is written off. Like it doesn't matter with this quarter because the star ratings. So the market can be forgiving, or it could go down, and then halfway, and once we get to May 2026. Which is insane that it's already 2026 and we're already talking about May, which is halfway in the year, which is insane. Like we're always looking at the future. Take a moment and just like go hug your family and kiss your family and call your mom and dad and because we're always talking about what's next, and life is short. So just to take a moment to just be present and kind of feel the world around you. Just sorry, I don't usually say these things because I'm like a workaholic, but just take a moment, okay? Okay, now let's go back to business. All right, so so going to May 2025, literally half. Sorry, 2026, literally half of the freaking year. Poof, yeah, yeah. We need to be more present, but I think a month before that, the market could become more future prognosticating to where it'll basically lead up to that date, and then maybe it'll explode. Now, granted, there are a lot of retail investors invested in this stock, and I don't think they're as educated as what we might think. I'm not insulting you guys. You guys are different. Guys, you guys are with me up in the middle of the night doing research. You guys are not typical retail investors. You guys are different. Okay, this is a very different crowd here. We got very, very, very motivated people, and that's you guys are not. You guys do not represent Main Street investors. We're talking about just people that are, they see a stock go up on a screener and they just go ahead and put a few dollars in it and then they take it out if it goes down. We're just people that that's not you guys. But yeah, let's see here. I'm just gonna look at comments. It's got to be 3 bill. I guess the market didn't hear Clove was gonna be positive in 2026. Well, that's the thing. I think they need to show it, and once it shows it, then that's what I'm saying. It's a waiting game, right? Money's transferred from the inpatient to the patient, right? Man, life moves fast. A good reminder, absolutely, because it's like, what the hell, What's going on, B-Rob? Love the new dog picture. Yeah, it's like, we're like already talking in May. Like, it's like, oh yeah, when May comes, dude, that's like half of the year. Half of the year is gone. We're just gonna be waiting. Be in the moment. Enjoy the journey. Enjoy the struggle. Listen, there is beauty in the struggle, right? More than the beauty in the success. There's beauty in the struggle. Okay. Enjoy this time. Okay. See how a company fights to become profitable, right? Try to improve yourself just like how Clover improved themselves. Go work out, right? Improve your family, improve your relationship with your wife, with God. Okay. So just, you know what I mean? Because we're talking like, oh, yeah, when May happens. I'm sorry. I'm a workaholic and I have a disease, right? I have a problem. I do. I admit it. I have a problem. I am a workaholic. Okay. I work. Babe, it was 3 a.m. I was here last night at 3 a.m. working, programming and coding. Right. And then I got up and then I circulated this room and I was thinking and I was pontificating in my mind. What do I want to do with my software? Okay. So there's something wrong in here and I'm trying to fix it. I need to be more present, right? But that's just what I do, and I've been doing this since I was a kid. I just think I build computers. But I need to be more present, right? Okay, so just don't take that bad quality. It's a bad you accomplish a lot, but it's a bad quality. Don't take that from me. That's not a good quality to take. Yeah. Say hi to the creator as well. Absolutely. Exactly. Absolutely. The struggle makes you stronger. Exactly. People will look back when the stock was 270 and wish they bought 100%. 100%. PLTR holders kicking themselves, remembering it was $5 just a few short years ago. Absolutely. And it became a triple dragon. Listen, now that I have all your guys' attention and it's not like a late live in the middle of the freaking night, let me explain to you something. So what I did is I created, so let me just, instead of like, I created, let me just show you the damn software so you can see. Because, it's just easier to see. Once you see it, it cannot be unseen. Let me just find it. And I hope, here it is. I think this is it. Make sure. I had a Diet Coke right now, so I'm a little burpyish, a little burpy. Yeah. All right. So, all right. So right here is a triple dragon finder. Okay. I still, this is like, I'm still programming it. This is this is so complicated. What it does is it searches the whole NASDAQ and looks for triple dragons. So I'm just going to show you. Let's just look. We can look for double dragons on just the FCF and OCF, or just a single dragon with a net income and negative OCF and right. So, or you can look at both. So I'm just going to do this and I'll just show you real quick. let's look at, I'm not going to search the whole thing because it'll take like 30 minutes. This is like legit, like, it's a whole, it has generative AI in the background and to be able to go through all this material and intelligently pick these things. But let's just search 100 out of the whatever stocks of the 6,000 stocks or whatever 5,000 plus stocks in the NASDAQ. And let's just go ahead and go from 2022, just to show you something, 2022 to like, I don't know, 2025, 2024. Let's do 2024. Yeah. We'll start the new scan. And then here it is. It's fine. Here's my MU Technologies. These are like all the ones that became triple dragons, and you can see it, it goes in and it searches them. Okay. There's Robinhood, right? So we're only searching a few. And it finished. It only gave me 6. So because obviously I only searched 100 out of, and then 6 came back. So you can imagine if you search the whole NASDAQ, you'll find more. But if you go ahead and if you do this analysis and if you do the summary statistics table, and if you look at a stock that's a double dragon versus a triple dragon, you can see that in the long run, from the 1-year flip to a double dragon to a 1-year flip to a triple dragon, you could see that the triple dragon goes up 116% on average versus the double dragon only goes up 63%. So you can see there's a 50% delta between a double dragon and a triple dragon, right? So obviously when a company becomes profitable, the stock actually goes higher, right? My humblest apologies. Net income flips are better than free cash flow flips, right? And this shows you the power of what net income can do. Okay, and then you could both flip. You could see the overall return. It's relatively the same with this. It's the same, right? And the sample size is small because I only did I searched only 100 stocks, and this is what I got. If you were to search for more stocks, obviously that's how I was able to do Robinhood, but I did this manually, which is very difficult. And you can see the free cash flow flips. You can organize them in terms of the earliest, latest. You can go in and look at institutional ownership. This tells you how many institutions are buying the stock. So it'll be great because you'll be able to basically see if it's low institutions like Clover, and then, right? So, but let me just give you an example. Let's look up a specific ticker, and this is something called Dave stock. I was able to find Dave stock through the Triple Dragon Finder, and you have to search more than 100 stocks to be able to find it, but this is the stock here. So what I want to do is I'm just going to go like this. What I wanted to do is I just wanted to zoom in here, and what you basically see is this is called institutional ownership, and 2 years ago, 503% plus increase in institutional ownership started buying. You can see here 2 years ago the institutions started. It's really hard to see, but institutions started loading the boat for Dave stock, and you could see Dave stock. If you look at the flips, Dave stock in 2023, it had negative 54 million of free cash flow negative, and then in 2024 it flipped to having 25.17 million in free cash flow, and the net income went from negative 48 million to 57 million, and that was in right. So you could see there's been a flip, and so what you could do is then you could do like one of those speculative intrinsic value. These are different types of intrinsic value calculation modes, and you could see you pick one based off of the numbers that make sense, and then you could see kind of where this could go. But you could see just from this, where this could be at, or I could just do the standard one, and you could see, where is this? But like I said, this thing flipped in 2024. So I'm going to show you something so you guys can kind of see. So if we go to Dave's stock, there's a reason why I'm showing you this. If we go to Dave, and I just want to show you this, you can see it's a nice stock, right? But watch, look at this. The stock used to be, a lot. It used to be a lot, and then it crashed. It literally crashed, right? There's a huge crash, and it crashed to like literally $4. There's a time when it was $4, right? And then what happened? The stock went back up to $281. So if you would have detected that this, because the reason why is it was free cash flow negative, and but then as soon as it flipped, most unfortunately people didn't listen. Institutions 2 years ago, they knew, those bastards knew, and they started buying. And they went from dropping it, selling it, and then they went to buying it. You see how these institutions, within a flip of a switch, they literally within a year, they just literally increased it by a lot, right? Remember the market sentiment intelligence I told you about, the 6 quarter rule? Yeah. Remember August 2026, I think that was the consensus. Um, so watch what happened when this triple dragon happened. Then the high it went up to was 5,722%. So you can see that that is a 57 bagger. So if you would have put $100,000 in this, you would make 5.7 million. Right. So this is the power of being able to find this. And then ICB rad here. Very sorry. I just I need to. Oh, I'm so behind on these comments. I'm really sorry. Yeah. So yes, toots have been selling. You could see it's 78% now ownership. So they went from probably a high ownership percent. It decreased by 278. Um, yeah, but they still 3 months are increasing. It's just it's a slow little drop. So we'll see. But yeah, that's why the stock is a little down right now, because institutions are kind of sold off a little bit. But again, because look what happened, the stocks literally went up, and you have to calculate the intrinsic value, yada yada yada. You have to look at the price to earnings evaluation model. You have to, I mean, you got to go here. You got to go ahead and do the market sentiment intelligence. You got to look at there are the revenues. Okay, the revenues are going up. What happens to their net income? Okay, it's 57 million. Is their free cash flows going? You have to go and do and use a software. You know, you got to go here and go Dave. You go put Dave, and then you go in and you see. You're like, okay, well, obviously Dave is in the price to sales ratio of, it's around. It tells you here. You know, if you can't see it, just here 5.61. And it used to be down here. It used to be a price to sales all the way down here, right? And then you do the price to earnings and yada yada. Okay, but that's the point, right? You need to propose to Michelle, Al. No, absolutely, guys, absolutely. It's coming. It's coming. I waste a lot of time thinking about Clove. The money working for us doesn't mean we have to pay attention all the time. No, absolutely. Yeah, let Andrew Toy, let them all work, and you know what I mean. And I don't say that like as like, oh, you work for me. No. I respect you. But just they are they have incentives. He has a mission. He wants to honor his father. That's very commendable. And the fact that he's helping other people, I respect that. And yeah, I just kind of let them do. And I just they report earnings. I look at them and I see what they say, and if they have executed, and then I follow through, and that's it. Yeah. Things change. Okay, then my investment strategy will change. But ultimately, I know there's going to be bumps down the road, healthcare stuff, and I'm okay with those setbacks. There's going to be setbacks in the future, guys. There's going to be setbacks, right? I'm okay with setbacks. A flu season can come right now, and it could basically hurt profitability, right? And that's okay, because I know that you can't. At the end of the day, you can't. Listen, guys. At the end of the day, you're not. The flu's not going to go anywhere. Flu, right? It's everyone deals with it. So just those types of kind of thinking. Honestly, Triple Dragon Finder may be the most exciting thing I've ever seen in the software. Getting into a company right before they hit all three is a huge advantage. Very straightforward too. Thank you, Rapala. Absolutely, Rapala. And that's the thing. And let me just very quickly, and then we'll go into the JP Morgan conference. The reason why it took me this long to make it is because I'll explain. The reason why is because I needed to build the data to get the sorry, there's some I still need to fix. There's still errors in here that I need to fix. Like, as you can see, I'm still programming this. You can see how the company is like there's that's ugly. There's still it's a work in progress. But you see, like for example, you're getting stock data performance. You have to build. I had to build the code from scratch to get institutional ownership. I have to build the calculation to where it gets this information. I had to build all in the intrinsic value. Oh my God, there's an intrinsic value calculation here that does the intrinsic value automatically. It calculates it. And soon there's going to be a price to earnings evaluation model here, then a price to sales evaluation model, and then obviously the flip analysis. The point is I had to systematically code each and every one. And it's like I had to build the base. You cannot build the house without having a strong base. I had to build the base, and then now I have AI. Sorry, Chinitsky, got a drink. I have AI, right, to go in and just go in and just interlink everything together and go in and use its intelligent model to just find patterns. And I couldn't do that. I couldn't just say, go ahead and do that. It'll hallucinate. I had to build the base. And that's why it took me a long time. But I promise you guys, again, I'm really passionate about this. How did Bill Ackman make his money? How did all these billionaires make their money? Right? I'm tired. I'm tired of Main Street not getting access to this information. And I'm telling you guys, I'm really, again, right? I like this is, I'm very passionate. Like I'm very passionate about, I don't know what I have to tell you guys. I'm very passionate about this. I feel like I'm doing God's work and I'm helping people. And whenever you have that, nothing's going to stop me, right? Nothing's going to stop me. Okay. All right. Now to, okay. Yep. Why would they be selling off after a good news approach? Oh wait, Rafiki. No, I'm talking about Dave. I'm not talking about Clover. I'm talking about, watch the video, man. No. Be careful. Money can't buy patience. Yeah. Damn, Bedrock, you rocked my mind there. He was pretty deep. So I mean, honestly, also like, money can't buy grit, and you can't teach grit as well. You have to experience it and learn it. Grit, either you have it or you don't. And the people that tend to have it are the ones that experience a setback and still pushed forward. But it's really what the really interesting question is, why are there some people that experience setbacks and keep going forward? And why are there other people that once they get a setback, they just give up? That is something I am truly interested in. If we can figure and crack that out, then we can really help with child education. Okay. All right. Excellent. I'm happy that you guys are here again. No, Rafiki. Oh, no, you're good. And drink up, boys. Yeah. All right. So with all that said, let's go ahead. And I'm just showing you the power of a triple dragon. That's all it is. We're going to go ahead and open up the investor conference for JP Morgan Chase. And then we'll go ahead and do this analysis right now. So why are they selling off Clover? Rafiki, that's the thing. Yeah, Rafiki. At the end of the day, they need to deliver profits. They need to see numbers, right? At the end of the day, it's all about numbers. And once those numbers land, then you go in and then it'll happen, right? Because if you look at Palantir or SoFi, it wasn't until they actually presented not even the first quarter of net income, not even the second quarter of net income, not even the third quarter of net income positive. It was 4 consecutive years, and then it finally went and went, right? I have not listened to Toy Speak. I have not listened to it. I have not. I'm going to be listening to this for the first time with you guys today, right? Thought of Christmas was 25 getting 2F a little late stream. I appreciate you, 3D Machines. I love you a lot. Toy crushes it. Really? Okay, good. You guys are cheating on me. You guys didn't wait for me. You mother. You didn't wait for me. You could have waited for me. You see how loyal I am. You see how loyal I am. I'm like, I'm gonna do it with my people. Man, screw you guys, right? No, I get it. You wonder the same after hearing him talk. Well, I already heard it, and you're gonna be excited. Am I excited? All right, let's do it. Let's dive into it then. All right, let's do it. You're making me excited. All right, let's go ahead. I have a speed increaser, so I may increase the speed. Where's the play button? Oh, here it is. Sorry. All right, so here it is. Why is it starting at 2? That's weird. Okay. Why is it doing that? Is this a replay? All right. So there's slides here. So we can just, this is sexy. Ooh, yeah, let's go, baby. All right. I'm going to shut up. Let's go. All right.
Good morning, everyone, and welcome again to the 44th Annual JP Morgan Healthcare Conference. My name is Matt.
Wait, that's too fast. Hold on. That's too fast. Sorry. What the hell?
McKeon, and I'm an associate here at JPM, and it's my pleasure to introduce our next presenting company, Clover Health. Joining us today from Clover is CEO Andrew Toy and CFO Peter Kuipers. They'll be running us through a brief set of materials, and we ask that you hold off on any Q&A until the end. With that, I'll hand it over to you guys.
All right. Thank you very much for joining us today. My name is Andrew Toy. Peter is sitting at the desk over there. I'm the CEO of Clover Health. I'd love to take you through where we are, what we think we achieved last year, where we're going.
Peter's sitting at the desk taking selfies. Sorry, I promise I'll stop interrupting.
This year, CEO of Clover Health. I'd love to take you through where we are, what we think we achieved last year, where we're going this year. So the usual statements apply here. We're public, of course, like we may make some forward statements. So Clover, we're a Medicare Advantage company. We're a payer. Last year, I stood up here and I said, what are we really focused on doing? So we are focused on the Medicare Advantage market. We had just reached adjusted EBITDA profitability. And we were saying to ourselves, okay, the core fundamentals of our model are differentiated. It's incredibly, it's a varied approach, one that not many people are taking, but have huge advantages. And we think that if we can get to profitability, which we did, the next phase is going to be a return to growth. That's what I talked about last year. We're going to be returning to growth. And so that's what we did. And we were very successful at that. I'll talk about that. We are positioned this year. We are already adjusted EBITDA profitable, as I said. We are now aiming to deliver GAAP net income profitability this year. So that will be good to deliver profitability on GAAP. And we continue to deliver industry-leading clinical quality. And I'll talk about that as well. So the key thing about what we're doing is that we are going to succeed as a business, as a payer, by doing the right thing in terms of improving our...
We're going to succeed as a business. Excellent. Triple Dragon. Excellent.
The outcomes of our members. So the right-hand side about improving quality drives our business and drives our profitability and also drives our growth. All of these things are connected, and these are the things that we're aiming to achieve. So in terms of our accomplishments, first of all, we delivered significantly above the market in terms of growth. We delivered 53% year-on-year growth. We had already been delivering 27% growth in the year before, and this year we delivered 53% growth. We had very, very high retention.
All right, what is he referencing with the 27% growth? He's referencing this here, 27% growth from this article here. That's what he's referencing. This was from last year's AEP results. But then this year, they're growing 53%. Definitely accelerated. Just wanted to point that out. Let's continue.
And we were mainly focused on MA switchers in our core markets, and we had also delivered on that as well. So this is a very high number. We're proud of it. And it's also growth, not just for growth's sake, but it's disciplined growth in our core markets that enables us to feel good because our management capabilities around our technology and around improving clinical outcomes are all available in the markets where we grew. I already talked about the fact that we are going to sustain our adjusted EBITDA profitability and grow that in order to hit the GAAP profitability line this year. We feel good about that. Also, HEDIS quality, a measure of clinical...
Wait a minute. Targeting sustained adjusted EBITDA profit, strong medical cost trend and cohort economics, gaining SG&A. Sustained adjusted EBITDA profit. Sustained means what? The same? I like the word increased. He said sustained. Sustained. It means it's the same. But he's probably just saying with the growth, we're still going to sustain it. Maybe. And I think if it is sustained, then maybe Counterpart Health is what's going to help make this from higher, maybe? Oh, my apologies. My apologies. 20 again, this is the first time me watching this live with you guys, right? 2025 accomplishments. You see how sharp I am? Not sharp enough to read the title, right? But as soon as I said this, I was like, wait a minute, sustained. What's sustained? What? I want growth, right? There should be more. Okay, sorry. My apologies. But it shows you guys how I'm paying attention. Right? Learn from how I'm. As soon as I say, wait a minute, you see, this means it's going to stay the same. Oh, this was this year, last year. Sorry. Okay. All right. All good. Just want to make sure. No. Good. Thank you. Right? Because I'm going to be sad right now. I'm like, oh no, what's going on? Right? Again, guys, listen. As I'm listening to this, I'm looking for red flags. Okay. I'm looking for red flags. All right. Remember, you're the captain of your ship. Okay. I was worried about that adjusted part. Where's that at? Where's adjusted? Adjusted eBay. Yeah, right. Yeah. I was like, what's going on here? But then it's like, oh, 2025 accomplishments. Okay. Sorry, Toy. I'm sorry. I love you. I'm sorry. But you gotta, you just gotta, you gotta, trust and verify, right? That's what physicians do, right? Trust and verify. That's what we do, right? So my apologies, right? No red flags here. Wow. All right. For B-Rob to say that, then okay. All right. But I'll still check just in case, right? All right, let's keep going.
Clinical quality, we are the #1 PPO in the country in Medicare Advantage on HEDIS quality. That's for the second year in a row. So we're feeling very good about the fact that while we're improving the business, we are also improving the outcomes and the clinical quality that we deliver to our members. And then I will also talk about our Counterpart Health business, where we bring our technology platform to other plans, other payers. And I'll talk about that at the end. But together, all of these things are based
other plans and other payers. Oh, okay. I don't know why. What's going on with this thing here? There it is. Other plans and other payers. Other plans and other payers. Ooh, other plans. That's good. That's good, baby. All right, let's go.
Around the fact that we are at our heart oriented around technology, oriented around the assistant called Counterpart Assistant. Clover Assistant is another way we refer to it. And this technology, this AI-driven technology, is at the core of all of these achievements. So what does that technology allow us to do? We aim to empower every physician with technology to identify, manage, and treat chronic diseases earlier. This is fundamentally what makes us different. We've talked about it for years and years. It is our technology vision. It's not technology for technology's sake. It's not AI for AI's sake or data for data's sake. It is bringing together interoperability, adding on AI, adding on capabilities and tools for physicians, all to deliver this outcome, treating chronic diseases earlier, identifying them earlier, which allows us to change the cost curve, which allows us to deliver that nation-leading HEDIS scoring. So when you diagnose something earlier, you manage it earlier, you manage it more cost effectively, you deliver a better outcome. That earlier dimension does a lot of work. So I think we're one of the only health plans who will say this is the core of our mission. I will also note that technology enables us to say every physician. Others sort of say, well, how do you use technology to identify the good ones and the bad ones and steer to the good ones? That's not what we aim to do. What we aim to do is actually help physicians improve their own performance. And that's why we add that line that technology can be an every physician thing and not a select your physicians thing. Those are very different approaches, and health plans often think about selecting physicians versus helping them all improve. And we're about helping them all improve. That's how we deliver all these results. So we have our AI-powered assistant. We have a significant addressable market. That's why we're able to grow so much within Medicare Advantage. We are thinking very strategically about which markets we're going to grow within. And we are also delivering. Guys,
I don't know if you guys can understand this right now, but this guy's speaking like a leader. This is we already knew he was a leader, but this is very good. This is very, very good. You can tell Andrew doesn't like to talk until he has all of his pieces, and he has his pieces now. Oh yeah, this is a different. You sense the difference. You sense the difference, guys. There's a difference. Yeah, he's speaking from a position of power. Yeah, he has his cohorts in a row. Exactly. I've never heard him speak like that. Yeah, exactly. There's a different tone. There's a different tone there. And if you guys are like, what do I know about tone? I published a paper on emotional intelligence and neurosurgery. You can go ahead and look at it. It's in PubMed, right? And it's a peer-reviewed article. It's on Google Scholar, and it's cited, right? I know how to judge tone. I'm capable of doing that. And I'm telling you, there's a different tone. There's a different tone here. And obviously, you don't need to be smart to figure that out. You guys can see it, right? If you've been following. All right, let's continue.
Like through our own clinical arm, care into all settings. Every physician in the wide network, and we have added care into the home as well, which is something we deliver through our own employees. So we feel like we can deliver care into almost every site with almost every clinician, all around the same clinical platform, the assistant. So this is a really important slide. this is what explains how it all ties together. So I'll spend some time on it. My own background, I'm the CEO of Clover Health. I am a computer scientist by training. I'm probably one of a few, maybe I'm the only computer scientist really running a health plan. And so when we think about that.
Exactly. He is the only computer scientist running a health. Listen, guys, listen. Let's just pause for a sec. Okay. Just like how Palantir is like $200 or 180, whatever, let's just give example. Pretend Clover is like $100 right now. Okay. But let's just, you know how like Dr. Strange does his little blah, 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 and then he like goes in and finds a path of a timeline. Let's just go on this timeline. Okay. Let's just kind of, the magic school bus. Let's just kind of go in that down. Okay. So the stock is 100, let's say. Okay. Okay. Now we're going to go talk to people and we're going to say, yeah, Clover has an AI platform and the CEO of this healthcare company is a computer scientist. In people's head, in the back of their head, they're going to be like, oh, wow, that makes sense. Everything's AI now. When did he become CEO? Like 2021, 2023, 4, whatever. Sorry, 2022 or 2023. And a little bit in 2022. And then, the stock was 60 cents in 2024. It's like he was a computer scientist and he was a CEO and the world was going into AI, open AI, trillions of dollars and all these things. And in the back of people's head are going to be like, wow, was kind of easy to see that this is obviously going to be a valuable company because you're having a scientist who understands AI and machine learning and is able to essentially do those things so people are going to be like, oh, why didn't I buy? Like, oh, like everything's becoming AI powered. Everything's becoming an AI industry, and he's the only CEO that's a computer scientist. Like this is why they say hindsight's 2020. And they're going to say, oh, this was kind of obvious. The world was headed into this digital age of AI powered infrastructure, and you have a computer scientist pretty much digitizing healthcare with the assistance of physicians. You know what I mean? But the problem is just people don't see that timeline until it's there because they can't see the future. You have to see more than what the analysts are seeing, right? Drunken Miller, right? Stanley. All right, let's continue.
There's a lot of people working on how do we bring AI into healthcare. But you need to bring it all the way into healthcare. You need to deliver a real result for a real human being. And so we are absolutely, in my mind, the AI leader in Medicare Advantage. We are focused on using the data available to us, longitudinal data via claims, interoperability networks.
We are the AI leader in Medicare Advantage. Whoa, go Toy. All right, I'm gonna go ahead and replay that. Toy, you need to calm down what you're saying, man. You're making me have some feelings for you, man. What's going on? All right, let's go.
Running a health plan. And so when we think about this, there's a lot of people working on how do we bring AI into healthcare. But you need to bring it all the way into healthcare. You need to deliver a real result for a real human being. And so we are absolutely, in my mind, the AI leader in Medicare Advantage. We are focused on using the data available to us, longitudinal data via claims, interoperability networks that bring data that are getting better and better every month, bringing data into our systems, cleaning that data, analyzing that data, and applying AI to all of that in the cleaning, in the aggregation, in the insight generation. And we train our models to support improved clinical outcomes, that earlier detection I talked about, that earlier management that I talked about. And it's built to be the core of what we do.
This is exactly what I'm doing. Every time the large language models are better, I go in and I take the best of the best. I train them on my data of my moat. My moat is my over 2.5 billion outputs of institutionally graded data. I take that moat and I apply it to and scale it with the creation of better AI. And that's how I was able to create something like this. And hopefully she can speak today. I don't know. I think the memory, my activity memory might be hazed up right now. I mean, it's at 95 out of 100. And so let's see. Hello, are you working today?
Yes, I'm working today. How can I help you?
Awesome. So she's working, right? Yesterday, the RAM, my computer, I still didn't restart my computer. But the point is as technology scales, our triple dragon finder will scale. Why? Because I have my finger on the pulse, right? As technology scales, I take this technology. I'm a developer. I'm a software developer, not formally trained. I don't have a computer science degree. But I was programming since I was 15 for fun, right? I just did for fun. I fixed computers since I was like 5 years old. That's what I did. I had no toys. Those were my toys, and computers were my best friends. That's very depressing, but it wasn't because I had the world in the palm of my hands. So anywho, that's what they're doing right now. They're scaling and they're growing with Moore's law now in healthcare. This is going to be huge. This is huge. Google what Moore's law is if you don't know what I'm talking about. Okay.
I talked about, that earlier management that I talked about. And it's built to be the core of what we do. From the very beginning, it's cloud native, it's ML native. And the nice thing about that technology is that as AI, LLM technology improves, which we all know is improving every single day, we can add that to our core platform because it's not that we are building all of those models ourselves. We can use foundational models. We can add on top of foundational models. We can train our own models. We can do prompting modification because all of this is a rising tide that improves our own platform. So as LLMs have come online in the last couple of years, we have integrated those into our own clinical platform and use them to supplement our own data and our own insights because we already...
That's exactly what Palantir did. That's exactly what Palantir did. You understand me? That's it. Palantir just started using these foundational these LLM models, large language models, and that's what it was able to. What these large language models do is takes these complex, mundane tasks and allow it to be easily able to, for the physician or let's say the Palantirian guy using the software, it allows the user interface to be a little easier for people. Hence why the user interfaces is getting a lot better now with our platform because we're infusing these large language models, right? And I'm training my own models, that's super intelligence. And I think that's what Clover's doing, which is going to be the third derivative that they're going to get to maybe 5-10 years. I can do it earlier because I don't have investors and I don't have people I take care of that can die, right? I can experiment, but I know they're experimenting in the background. I haven't released the higher intelligence one yet because I'm still working on it. But I guarantee you, I guarantee you, their top chief production officer right now is working on things that are agentic that'll blow your effing mind. Okay, I'm telling you right now, right? I'm telling you, I'm as a software developer who's a medical doctor, I'm telling you that's exactly what they're doing. Right? This is exactly what happened to Palantir. And it's the same playbook that they're doing now, but healthcare. And they have the data, and the data is gold. They have the data. Okay. All right. Let's go ahead and play.
We have the engine, and this is just a way to turbocharge that engine.
They also have the engine, right? You know the little comedian, the machine. Turn on the machine. Machina.
Because all of this is a rising tide that improves our own platform. So as LLMs have come online in the last couple of years, we have integrated those into our own clinical platform and use them to supplement our own data and our own insights because we already have the engine, and this is just a way to turbocharge that engine. When you have all those capabilities, when you are able to put those already at the fingertips of physicians, which is what we're able to do today, what that means is, and this is what the line on the top says, we can empower any doctor, any clinician, on the wide network. So we often talk about the wide network. Why is that important? Because in our core business, which is the health plan business, what people see is when they go shopping, they don't shop and say, hey, I want an AI-powered health plan. Maybe one day they will, but they don't right now. What they say is, I want doctor choice. I would guess that the vast majority of people in the US, at this conference, all of you, when people pick their health plans, they generally pick the PPO. Or if you pick the HMO, it's because you settle for the HMO. You don't pick the HMO, you settle for the HMO. But people want the PPO. And why is that? Because they want physician choice. They want to know that if there's an expert they want to go to, they can go to the expert. They don't want referrals. They don't want gatekeeping. They don't want all of these things. What they want is to think and know that they can go to any physician. And so that's what we focus on. 98% of our...
Okay, I get that, Andrew. I get that, Andrew. I get that. I understand that. I respect that. and that's okay. That's fine. You're correct. That's exactly what the people want. And this is not an argument for you. But can I just say something? Time out. Business wise, he's correct. I'm wrong in this case, but let's just time out. For all of you that are watching, you better go to your primary care doctor. Your primary care doctor will shield you. Okay. If you don't have a primary care doctor, you're effed. You understand me? You're effed. It's like going out there in war with no Secret Service and no military protecting you. There's a lot of diseases out there. You know what diseases out there? Where do you think I got these gray hairs from? Really from the programming, but that with medicine, there's a lot of diseases out there. You don't know what you guys can get. It's very dangerous. Okay, you're going out there with the wild with no primary care. What do you know, right? To go see a doctor. A primary care doctor will defend you. I get it. There's gatekeeping. I get it, and I know that. Fine, that's fine. Okay, but your primary care doctor will help you. Go to your primary care doctor. Okay, because that's the guy that's going to break down the silos. You understand me? I get it. And they encourage that. And I get it. He's speaking from a business perspective. Me as a physician first, you have to respect your primary care doctors. Okay. They know what they're doing. Okay. They're very smart. They train in OBGYN. They train in peds. They train in emergency medicine. They train inpatient internal medicine. They train outpatient clinic. They train outpatient cardio. They work with the cardiologist and they spend time with the cardiology clinic. They spend time with the general surgery clinic. They're also in the operating room. They spend time in the urology clinic. They spend time with neurology. You understand what I'm saying? So don't skip your primary care physician, right? To go to the expert. I get it. Maybe, I guess. But then you start getting fragmentations because now the expert's saying one thing, but you don't basically tell the primary care doctor, which is what Clover's trying to fix, right? But please go to your primary care doctor. I disagree from a medical standpoint, but I don't like the fact that patients can go directly to their, because he's saying the experts, and I get it, right? But family medicine doctors do the initial diagnosis. Okay. So I'm sorry I have to hit you back on that, Andrew Toy, please. That's something from a business perspective, you're correct. I agree. From a family medicine perspective, internal medicine, primary care, outpatient, from my medical side, which that's why I say doctors are not good businessmen. I'm sorry, but that's wrong. Right. But this is a business. This is a JP Morgan conference. So in that perspective, he's correct. But I'm just telling you, the audience, because your guys are listening to this, you need to have a primary care doctor. Okay? That's it. All right, let's continue.
Our membership is within a PPO. Why is the PPO? Why doesn't everyone just do the PPO? Well, many people have been going into the PPO for the last few years, and much of the industry retreated from the PPO last year. Why is that? Because it is very difficult to manage care on a wide network. Because it's very easy, well, not very easy, but it's more straightforward to say, let's select those physicians and let's work with those, than it is to say, here are all the physicians in an area, how do we improve those physicians? So the PPO is more challenging for cost of care. It is more challenging for HEDIS and clinical scores. What our technology approach on the left-hand side allows us to...
Again, that's all he's just trying to say is the PPO relative to HMO. They can still do it while everyone else retreated. It's expensive to run PPO, and they're doing it correctly. It's just outside of this conference, you all need to go to your primary care. I'm very passionate about this. Primary care they're the doctors that can have the biggest impact on your life. Okay? It's very clear. All right?
Do because we are so focused on that as the core of the business. It enables us to give that technology, and we give it away effectively for free to physicians. When they use it, we see their performance improve, and I'll talk about that more in a second. But if you believe that we can give that technology to anybody and their performance improves, they're detecting those diseases earlier, they're identifying diabetes earlier, what that means is we are able to deliver the cost of care and clinical quality of an HMO within a PPO construct. We have effectively removed the trade-off of the PPO. So we get the benefits that's what people want as a product. We get the benefit of the HMO in terms of managing clinical quality and total cost of care. And what that means is, taken together, that we feel very comfortable that we can grow in a market segment that others find challenging, in a market segment that is desired by the consumers, and do that in a very sustainable way improving our profitability, maintaining our business discipline. So what does that mean on the clinical side? All of these are the greatest hits of aging, right? As we all get older, we are going to develop one or more of these conditions. That is just a function of being human. It is a function of aging. Diabetes, metabolic syndrome, right? Related. CHF, heart disease. CKD, kidney disease. COPD, lung disease. These aren't the only conditions that people will develop, but these are the major things, the diseases of aging. We have published a number of papers about, and you can go find them on our website, about how doctors using the assistant, Clover Assistant, are able to identify diseases earlier, manage them earlier, and when they're managed earlier, we deliver better outcomes. When a doctor using Clover Assistant is identifying kidney disease earlier and maintaining more years of healthy kidney function, identifying diabetes earlier, making sure that A1C is regulated earlier. All of these things are things we publish papers on that we see in our data.
And very quickly, diabetes can actually cause chronic kidney disease because that extra glucose in the body, because what insulin does is insulin goes into the cell, it activates the GLUT4 receptors, and it allows glucose to translocate into or go from the outside to inside of the cell, which then will allow for metabolic processing. The problem is when people are type 2 diabetic, they become insulin insensitive to where the body has to make more insulin for the receptor to listen. The receptor becomes deaf. All right. And what ends up happening is this is called insulin hyperinsulinemia. So it's hyperinsulinemia. Insulinemia, compensatory hyperinsulinemia. It's been a while since I've worked that part of my brain. So what ends up happening is then the pancreas starts to overproduce insulin from its beta cells, and then unfortunately the pancreas then starts to get tired, and the beta cells start to go apoptosis, meaning they die, and then you become like a type 2 diabetic. Ultimately, then becomes like a type 1. So essentially what ends up happening is when these folks don't have good insulin, there's a lot of glucose in their body, because remember that glucose is what, insulin helps it bring it into the cell. But if there's no insulin, then the glucose is out in the body. So what this glucose does, think of glucose like shard glasses, right? Like imagine having a bunch of shard glasses in your body, and those glucose molecules go in and they start going into your eye vessels, and they start sharding them to where your eye and vision becomes worse. They go in your kidneys and they start sharding the kidney and scarring those arteries. So then now there's not a lot of good blood flow that comes into the kidneys, causing the kidneys to be diseased. Or let's say those shards of glass, those bad glucose glasses start, they start going down into your legs, and they basically start sharding those arteries and killing them. You start to, and then all of a sudden it starts to affect the nerves. So then you get peripheral neuropathy, right? So you see those are the things. So if you can actually help for detection and early diagnosis of diabetes, you will actually help with chronic kidney disease, right? So you see how they're all interlinked. They're in the same body. We're all connected. Right. That's why I love the stock terminal. That's why I love YouTube. We are sharing a collective consciousness, and together, if we advance, all of us at the same time. But that's like philosophical So this is the science, right? For folks that are tuning in for the first time, I am a medical doctor. I'm not board certified, but I just, I'm very passionate about this information. Okay. All right. Let's go ahead and listen up to hear.
Where we compare physicians using our tool to physicians not using our tool. And we're constantly investing and making that better and better and better. So that's not point of time statistics, though the analysis is point of time. These are things that we are investing in every year and have invested in for multiple years. So all of that is tied to why we feel comfortable that as we return to growth, as we deliver profitability and are now growing significantly, when we grow, we are going to grow in a disciplined way around where we're able to have a lot of physicians using Clover Assistant. And so this year, on the left-hand side, as you can see on this slide, we grew around 53%, going from about 100,000 members to about 150,000 members, just north of 150,000 members. At the same time, first-year members, who are typically the most challenging members, when people first come to you, the first year they're with you is the year that they're going to have the worst total cost of care, the worst clinical outcomes. That's because they're not yet managed by us, right? When they come to us from another plan, they're not yet fully managed by us. It takes a little bit of time for us to get them onto our management program. We still anticipate that this year there will be a significant improvement in the contribution profit within that first membership, for first year cohort of membership. So between those two things, because we feel really good about that contribution profit adjustment, that is a major driver on how we intend to deliver net income profitability this year, GAAP profitability this year. So there's clear line of sight. We want to make sure that all this happens. Obviously, we'll talk about that more as we go through the year. But the key thing is that this is a huge amount of growth for almost any Medicare Advantage plan. The reason we feel good about it is it's in our core markets. We had a lot of retention. We feel good about the contribution profit of first-year members. So all of these dimensions on this slide are the things that are affecting this, how we feel, the tailwinds that we feel we see in the industry. First of all, we are going to have a 4-star payment year, the first 4-star payment year that we have in 2026. I think that's obviously very important. Second of all, there was a significant CMS rate notice affecting the benchmark and an increase in the Part D direct subsidy for payment year 2026. That's obviously a tailwind. In the growth season, we had
which a tailwind that every insurance company is going to experience, but there's a huge, we're talking 9% rate notice. That's like a kick in that freaking, you know what, man? That's huge. That'll send you flying. 9%. Plus, it's more. This rate notice is more bigger than the 4-star notice of 5%. Like, holy crap, that's a huge, right? That's a big tailwind. Right, let's continue.
The tailwinds that we feel we see in the industry. First of all, we are going to have a 4-star payment year, the first 4-star payment year that we have in 2026. I think that's obviously very important. Second of all, there was a significant CMS rate notice affecting the benchmark and an increase in the Part D direct subsidy for payment year 2026. That's obviously a tailwind. In the growth season, we had very, very high retention, and our returning cohorts are the main drivers of our profitability and contribution profit. That high retention, the best retention, I think, amongst the best retention we've ever had, significant tailwind. We increased Clover Assistant coverage last year in our core market, and we feel good about that. And also, of course, we are still not fully at scale. We are still not fully mature. So I think that there's a lot of room for us to improve SG&A efficiency just as a company. And when you add in AI-driven efficiencies, I think even more opportunity. So you should see us constantly working on SG&A efficiency through the next few years. So as we look at this, and I mentioned the cohorts just now, I think the major thing I would want people to take away is that new members are contribution profit negative. I want to get that to break even, but let's call them negative right now. They were significantly negative last year. They're going to be less negative this year. That feels good. We're going to be focused on improving the contribution profit, meaning reducing the loss of those new members. That's not unique to Clover. That's just the industry that you get pressure from those first-year members. I think that we are going to have market leading, and I want us to have market leading contribution profit loss on those new members. I want to get that to break even actually, but we're still losing a bit. And I think that will be market leading. And I think.
Okay, wait a minute. Question to all you guys. I need your help. Let me expand this picture. So I need your help. Is this just showing, this is year 1, this is year 2. Is this just the new members? Or is this cohort? Because if this is the case, and if this is just doing the math, then if it's going to be $70 for the whole thing, then that's about $10 million per month. $128 million. That's still good, dude. Yeah, bro. This is guys. I'm trying to find a red flag. I can't. Andrew, you're making this hard on me, man.
I think our returning cohorts, I would consider to already be really, really strong. So those are the core of our profit generating engines, core of how we maintain adjusted EBITDA and net income profitability is the fact that the returning cohorts improve generally year on year. And if you look on the right-hand side, that is largely driven by Clover Assistant. If you look at these vintages of Clover Assistant joiners, Clover Assistant managed members get more and more profitable year on year. And the reason they're getting more profitable is if you think about that early diagnosis and you think about the area under the curve, if you diagnose something earlier, you know, it might even like cost you a little bit more money because they're now taking a medication they weren't taking before, or they're now having a few more doctor visits that they weren't having before. You have to invest in that earlier, right? If you find something earlier, you're going to start managing it. But if you think about the payoff, because you started managing it earlier, compared to the counterfactual, compared to someone who wasn't managed earlier, that year 2, 3, 4, and 5, that's where you're going to start to see the huge benefits of managing that earlier because you flatten.
Exactly. Now I get it. This is why I'm very patient when it comes to software and healthcare. It is that's why JP Morgan Chase, Warren Buffett, they all failed with trying to design an AI healthcare company. Listen, guys, it takes time for the body to heal. Okay, the fact that you're seeing these improvements, understand that the investment that you're making is actually helping people making their lives better, right? So that's why I'm very patient. In fact, I'm pretty patient with this one. I'm pretty patient, right? Every time you see improvements in profitability, understand that's because the patients are healthier. Isn't that beautiful? I love that. Versus another healthcare insurance companies, it means they're denying healthcare. Different feeling, does it? It's a different feeling, right? All right, let's continue.
The curve earlier. You reduced the progression of that disease earlier. So compared to another plan who's not doing that, you're going to see significant improvements in the total cost of care and their clinical outcomes. So I think that's why you're seeing that our core philosophy driven by our technology, the earlier diagnosis, earlier management, has that multi-year payoff, has that compounding effect. And the nice thing that we're also seeing is that as we now have more and more of these cohorts coming in, being less profitable in the beginning and then improving over time, those are now layering the way you would expect them to layer, right? So you have people from several years ago driving a very mature vintage, a slightly less mature vintage, a slightly less mature vintage, but all of them are improving year on year. And then as we add new members into the beginning of that stack, you know, we mature those new vintages, and all of those can be improved by investments in our technology. To be very clear, I think that I want to say that we have multiple cohorts. I'm proud that those cohorts stack up. And I'm also proud that because our approach is based upon technology, that we will be able to improve each of those cohorts, even the older vintages, through developing features and releasing them within Clover Assistant. Right? I think that's something that's really, really interesting.
So what that tells you, then you know how like you have year 4 gets 20% off of the 10-year of these folks. I think what they're trying to do is see if they can do 25, 30, 40, 50%. If they can get to a point where these patients are so managed that it becomes so cheap to manage them that, dude, this thing has the power to eat up the, holy crap. Vivek is saying it. He said it. This thing has the power to eat up the whole Medicare Advantage space. And if you think that's crazy, what happened to Uber? Right? Like, remember like when apps came around? I got an Uber app, you know, I just gonna get my taxi come to me. You know, and then I used to have a friend who owns a taxi company, and I used to engage in bad hookah activities, which is not good and healthy for you. Don't ever do that. But he was you know, was a typical cab guy, you know, with a hookah, right? Like, you know, you know, the hookah sound. And he used to say, he used to talk, you know, talk. He's like, listen, man. He's like, you really think that stupid app that you got is gonna disrupt my business? He's like, I can go in the airports. I got a license to drive. These people don't have licenses. They don't know how to drive. They're gonna get in accidents. Yada yada yada. What happened to the whole taxi industry? What happened to it? Right? Look at the Baldwin, whatever his name is, right? Making fun of the iPhone from Microsoft. It doesn't have a keyboard. Well, look at it now, right? You've seen past billionaires and millionaires doubt the impact of technology. Just like how people doubted the impact of our Al Stock Trades platform. They're like, this guy says he's creating a software. It's just an Excel spreadsheet. Listen, man, those were the beginning stages. You guys didn't even know what I had in the background, that I was programming and coding. You guys had no idea. Now you guys see it. Now you go, holy shit, this guy's actually not full of shit. Okay, right. So you're gonna see this play out. and this could disrupt all of healthcare, which is insane. Isn't this amazing? This is amazing, right? We're gonna have a great time, right? Because we're gonna be going to Vegas, going to have fun. We're gonna have a nice summit, and you know, they're gonna look at us. They're like, man, why are these people dressed up in green? They got a lot of money, but the way they don't act like old money. Nah, we're new money, baby, right? Let's go, right? We're new money. Like this, where these people get their money from? they don't they don't act like old money, right? Yeah. Let's continue.
Others do not have access to. Because if you think about it from a network contracting standpoint, if you contract with a certain physician group, then your speed of improvement is constrained to how fast that physician group can improve, right? And so you're like, what are they doing? What are they trying to do? They can think about it that way. That's not bad, but you're constrained to that. If you roll out a new program, you're constrained to how fast that vendor you're using for that care management program can improve. Because we are built on technology, and the progress of each of these cohorts is driven by our own technology. We built it. As things like AI get better and better, we can integrate that very quickly into our core technology stack. We're doing that every sprint, every month, and we can see improvements within each of those cohorts simply by pushing out new models.
Every sprint, every new month. They're doing exactly what I'm doing with the AL Stock Trades platform. They're on top of it. They have their finger on the pulse. They're early adopters. Excellent. Excellent.
Pushing out new features into our Clover Assistant network. That is a very, very different way of thinking about clinical management within a payer construct. So which brings us to Counterpart Health. So Counterpart is a fully owned subsidiary. It's one of our divisions. And Counterpart is where we bring our own technology into plans that are not our own plan. So I have a Clover MA plan. That's the one I talked about just now that grew from 100,000 lives to 150,000 lives. Counterpart is where we make our technology, all the technology I just talked about, available to other health plans. Our vision here is that Counterpart Health brings Clover's AI technology, the assistant, to every Medicare eligible life. And there are a couple of ways we can do this. But the way I think about this is that we already.
Wait, what did he say? Did he say Medicare Advantage or hold on? Are we going back to ACO?
There are a couple of ways we can do this. But the way I think about this is that we already have the #1 PPO.
Oh, it's in my face. Every Medicare eligible life. Oh, shit. Oh, shit. Let's go.
In the country. I already talked about that. We're very proud about that in clinical outcomes. There are many other plans who would love to improve the outcomes, the HEDA scores within their population. We have that really interesting compounding cohort dynamic because of the earlier diagnosis of disease within our patient cohorts. We can bring, that's all driven by our technology. We can bring that to others. Remember, we built this from the very beginning. My background as a software engineer is in B2B software. We were cloud native from the very beginning. We built it to be multi-tenant. And all the ML engines and the data engines are built in a perfectly modern way from the very beginning, even for our own plan. So we are in a great place where from a technology stack perspective, we could bring it to others. You might ask, Andrew, like, why would you bring it to others? Wouldn't you use this for a competitive advantage for your own plan? It is a competitive advantage for our own plan. Don't get me wrong. But remember, I said that we were very disciplined about where we grew. I think that's a really important dynamic. We want to be focused on our core markets where we have a tremendous total addressable market. Right? We have plenty of room to grow in our core markets. I do not feel constrained on that at all. And that will be our main profitability engine. So that's probably going to be us.
What did he say? Competitive advantage, competitive moat, Warren Buffett. What I told you about how I like to invest. All right, let's replay this again.
Plan. It is a competitive advantage for our own plan. Don't get me wrong. But remember, I said that we were very disciplined about where we grew. I think that's a really important dynamic. We want to be focused on our core markets where we have a tremendous total addressable market. Right? We have plenty of room to grow in our core markets. I do not feel constrained on that at all. And that will be our main profitability engine. So that's probably going to be us in, call it 3 to 5 states is where we'll have our own plan. Counterpart, we will have in all the other locations. We're not going to grow our own plan to every single other state in the country. There's just physics of Medicare Advantage where that's just challenging and not necessarily the best use of capital. We can invest the capital to drive our business engine and our market share in our core markets, and Counterpart can we bring our technology to plans in every other market in the US by partnering with local plans and helping them see the same improvement in their clinical quality scores, see the same improvement in earlier diagnosis, and see the same improvement in total cost of care. So our technology, our software is ready. This is already running in multiple places. We announced this, I would say, like maybe coming up on 2 years, 18 months ago. And we have done a number of pilots, a number of deployments. It's being used already in markets outside of our own plan. This is not a future-looking vision. This is already happening. I expect this to continue to have momentum, continue to accelerate. We're deploying more and more users every day. We are rolling out to more and more physicians every day in markets where we never would have had that because we don't have a plan. We are partnering with other plans to do this. So I think there's an extensive opportunity in this particular area. What customers are we targeting? This has moved around a little bit, right? So when you bring a new capability to market, you're not, you might have confidence, but you want to know where your product market fit is. I think we're seeing now, we know where the resonance is. It's whoever is top of premium, and I mean that very specifically. Top of premium means you carry the risk. Whoever's top of premium for Medicare Advantage. We're staying within Medicare Advantage. We're not bringing this to other things like Medicaid or ACA or commercial, maybe in the future, but not yet. We have been asked to do.
Okay. In Medicare Advantage. Okay, that is fine. Okay. You spoil, you grumpy cat. You grumpy cat always make me grumpy. All right, you got it. All right. Understood. Okay. Understood.
It's whoever is top of premium, and I mean that very specifically. Top of premium means you carry the risk. Whoever's top of premium for Medicare Advantage. We're staying within Medicare Advantage. We're not bringing this to other things like Medicaid or ACA or commercial, maybe in the future, but not yet. We have been asked to do that, but we're not going to do that yet. We're staying within MA, and MA payers or risk-bearing providers and aggregators.
We've been asked for that. Who asked them? Molina. That's who asked them. Molina, I think. Yeah, Molina.
Who are taking on MA risk.
Oh yeah, and Dr. Burry, I know you're watching. When are you going to come to the dark side? I'm waiting.
Very similar looking, but different kinds of entities. Those are the two places we're seeing a lot of resonance for Counterpart. And so when we bring them Counterpart Assistant, we show them what it drives within our own plan, the kinds of results that we can deliver, and we have a lot of that data. It's longitudinal data. We feel very good that there's a tremendous amount of interest. Then people ask us, well, can you deploy this to another entity? We can show them that, yes, we have. Multiple times we deployed it to the other entity. What kind of data do you need from us as the customer? We can list what kind of data we need, and we can bring a large amount of the infrastructure needed to process that data. They just need to sort of give us certain feeds. And then we are then able to say, and I think we feel confident that if we deploy this into your region, you will see the same improvement. Often we then start with a pilot, and then we move into productions. What kind of challenges are they asking us to solve? MCR pressure, MLR, same kind of thing, like loss ratio pressure. Stars performance, because they want much better HEDIS performance. They want us to help them utilize the data they have available because they don't think they're using it appropriately. And the other thing that I will mention, and coming back to that concept of the wide network, is sometimes what they're saying is, what it is Andrew, we just don't know how to manage all the doctors. Like if we don't do something, we're going to have to just focus on our HMO doctors, but we want to work with all the doctors in our region, and we have no way of doing that. Remember, I said that we want to be able to bring technology that works with any physician. That actually resonates with a lot of plans because they feel forced back to the HMO. They want to be on the PPO, and we're like, we can let you stay on the PPO. We can let you work with these same doctors. We can let you keep them in their network, your network, and you don't have to give up on loss ratio and stars in order to do that. So we really do think this is a very special offering. It is something that's developed within an MA plan, and so we can point to the results within our own MA plan. We can just say that we are MA specialists, and we know just about the Medicare Advantage, as much about the Medicare Advantage program, sometimes more than the people that we're working with, and that's something that's very differentiated, unique to in our offering. We can talk in great detail about how they deploy it into their network because we have all that experience from our own MA plan. And so when we show them the results, we have a lot of credibility that we can help them as well. It sounds a little bit magical because it's all based on technology.
Exactly. They have a lot of credibility. Look at the data. Look at the SEC 13F filings. Sorry, not the SEC 13F. Look at the 10Qs. Sorry, the 10Ks. Just what's going on with me? What's going on? What's in this? What the hell's in this coffee? What the hell's in this coffee? Right? The 10Ks. Right? Look at those annual 10K reports. Right? They have a lot of credibility.
But that's the part we feel really good that we can deliver on. So lots of momentum here. We're continuing.
They have doctors, PhDs, and MDs writing and publishing these white papers. Listen, doctors are not going to put their names on a paper if it's fake. All right, we don't do that. Right? Rule number 1: do no harm. Rule number 1: do no harm. You understand me? Right? We will lose our medical license like that, as we should. Okay? A lot of credibility.
continuing to invest. The nice thing is this is really investing in a go-to-market team for Counterpart. The core technology is fundamentally the same as what we develop for our own health plan. So as we develop more and more features for our own health plan, the first piece of ROI is already positive because we get that from Clover's MA plans. And then all of our Counterpart customers get the benefit of that as well. That's a very interesting proposition because it means that there's not a lot of trade-offs that we have to make. We already know we're going to be able to invest in our technology. We know we can unlock headcount and develop more and more features. We know we can build more and more models. If it works for us, it's going to work for others. And then we can then just expand the TAM of our technology by bringing it to others via Counterpart. So the beating heart of our plan gives us a huge advantage in terms of developing this software, investing in this software, and rolling it out that I think is not replicable if the software department was just on a standalone. So looking ahead, just repeating again what we talked about today. We want to maintain our market-leading self-funded growth. So growing vastly above market on a percentage basis. We feel good about that in our core markets. Self-funded means that we feel good that the profit of those layering cohorts will be self-funding, meaning the returning cohorts will fund the addition of new cohorts. And that feels good because that's the engine you want for growth. We are looking to deliver for the first time this year within financial year 26 GAAP net income profitability, and that's a big deal. The last milestone was adjusted EBITDA profitability, and we have been profitable there for a while. And cash profitable, we are now going to be GAAP profitable.
What did he just say? We were EBITDA profitable and we were cash profitable. What does cash profitable mean? Free cash flow positive, double dragon. What does cash profitable mean? It means free cash flow positive. What goes in the intrinsic value? Free cash flow. Okay. What did he say about net income? It's a big deal. Triple dragon. It is a big deal. Don't you think Vivek is a billionaire? Don't you think he knows what an intrinsic value calculation is and a discounted cash flow statement? Don't you think he knows about discount rates? I'm showing you how these people operate. This is the first time in history that a triple dragon's being documented by someone who used to be freaking homeless and now sitting in a $35 million home. Okay? Are you starting to see this? Are you starting to see this magic? Are you starting to see this? Right? It's all in the math. Okay? It's all in the math. Right? This is the first time this ever has been documented, and you're about to basically see it right now, right? And all of you now are going to get access to this damn software that I created that has taken me from zero to hero, okay? This is the power of what we're building, okay? And you're going to see it, right? Just wait and see this beautiful freaking seed sprout, right? And this seed is going to sprout so good that's going to create generational wealth. All right? Let's continue.
I'm very proud of that. We are going to maintain our industry-leading clinical performance. Again, #1 in the country on the PPO, I think is a massive accomplishment. Big accomplishment for our health plan, big selling driver for Counterpart. And we are going to keep expanding and investing in there as well. So we'll be looking to announce more around what we're doing there, et cetera, throughout the year. Counterpart on a different cadence in our MA plan, but we're very excited about what we see. We found our product market fit. It's about driving forward and making sure that those pilots keep expanding, and then deploying more and more throughout the entire country. So you should hear more about Counterpart nationwide presence as we go through the year, and those will benefit from all the features that we release within the assistant this year and next as well. So that's our goal. It's about execution within the core plan. It's about maintaining disciplined, profitable growth within our...
Listen. A lot of retail investors, what they do is, oh, I see AutoZone everywhere. Good, let's go. I see this everywhere. Let's go. I see this everywhere. Once you start seeing this company sprout out everywhere, that's it. Product market fit. Execution. You see SoFi Staples Center, right? SoFi Center. It's coming. It's coming.
Plan. Investing deeply within our technology because the AI era allows us to be a huge rising tide that drives the performance of our own technology within, and then bring it to others through our third-party sales. Brought all together, I think this is a fairly it's a unique proposition that only Clover can offer. So I'm going to stop there and jump over to questions.
Yes, not replicatable. Only Clover can offer. Riskier provided Summit Health. Interesting. We'll see. Top of Premium Humana. Yeah. These are all great. This is a high margin business. Let's go. Absolutely. Excellent. New Jersey, main growing area for the MA plan, but not for this Counterpart. Main profitability engine. Yeah, maybe. What about Counterpart? We'll see. I don't know. Risk bearing. Caffeine's kicking in. Oh, you sure it is kicking in. I feel Jesus, baby. Let's go.
Great. So we have a few questions in the queue from the telecast. So we'll start there. So you just walked us through strong AEP results with 53% membership year-over-year growth in Clover's past.
This guy sounds like a bro. This guy sounds like a financial bro. Hey, what's up, dude? Yeah, we're just gonna go ahead and walk through a couple of distance, bro. Yeah, I used to tutor these business people, right? In the executive MBA, finance and economics, bro. I used to tutor these undergraduates, bro. Yeah, right after they do their frat party. Yeah. Yeah.
So we have a few questions in the queue from the telecast. So we'll start there. So you just walked us through strong AEP results with 53% membership year-over-year growth and Clover's path to its first full year of GAAP net income profitability this year. As you look at the much larger new member cohort entering into 2026, what gives you confidence that underlying cohort economics improve year-over-year and that this growth is sustainable?
Yeah, thanks. So I think there's one thing here where a lot of growth can be scary within the Medicare Advantage industry. And so a lot of people are asking this question right now, which is, you feel good about the growth, right? And the answer is yes, I do feel about the growth, good about the growth. And I think that coming back here, this is a simple way to look at that particular answer to the question is there's a number of different factors, not just one single factor that controls for that, but this has a lot of them on there. We have a 4-star payment year this year. We have the CMS rate update, which is different, which is higher than last year. The Part D direct subsidy, which is higher than last year, which was revenue. We have really strong retention. Retention within core markets should be emphasized on this slide as well, which I think is fantastic, and growth within core markets. CA performs better and better and better, and we are improving SG&A year on year. So while we have a lot of growth, a lot of things are fundamentally different this year than last year as well. So I think that we are investing in growth. Don't get me wrong, we're investing in that first year cohort. We want that cohort compounding that I talked about just now, but we also have a significant number of tailwinds that are affecting this year that makes us feel very confident. And of course, we always look year on year to see how much we want to grow and how much we want to price, how we want to price our products during the bid. But this year we wanted to grow, and I think we delivered on that.
Great. And then there's obviously a lot of attention recently on AI across healthcare, including both consumer-facing and oriented tools focused on engagement and info access. From your perspective, how do you think about the role of those tools relative to clinician-facing platform like Clover Assistant?
Yeah, that's an interesting one. So, ChatGPT Health was announced just before this conference. Claude, like Anthropic's offerings were being offered. The way I think about that is 2 different dimensions. Number one, all improvements to the core models, the foundational models.
Exactly. That's what it is. It's only going to make Clover better because Clover is outcome driven, not high quality decisions. It's high quality outcomes. And didn't I tell you they watched ChatGPT Health a couple days ago? Didn't I tell you they already talked about it? And Vivek was addressing that on his Twitter post. Guys, it all makes sense. Stick with me and ask questions. This is an educational platform, and I will teach you how I think. And you can follow, and hopefully once you learn how to think, you realize that you've been thinking for a long time, and you can trust in your gut, and you can take your gut and you can communicate it to your hands, right? Obviously, there's a brain involved there, and you'll challenge me and type questions in the chat or talk to me in the stock terminal, right? And we can grow together as a family, right? The family that I never had. Okay? Let's continue.
Accrue to benefit to us. We can just use those foundational models. We're almost customers, the target customers of those foundational models. So you should expect as those foundational models improve, that is a natural rising tide to what we provide. We do not compete with those models. If I was a startup, I might think of something that's slightly differently because I have to say how does what I offer differentiate it to what the foundational models can offer, right? That might be how I think about it if I was a startup. I don't think about that at Clover because we have our own plan. And what that means is any advancement in the technology can be deployed for the benefit of our members and the benefit of our business. And I think that's a very nice place to be sitting right now. So fundamental models, all for progress, that makes a lot of sense. The second dimension.
Exactly. I don't care about if a foundational model gets better. It's going to improve me. I already have the data, just like how Clover Health has their patients in their plan. I already have my 2.5 billion outputs of institutionally graded data. I just need to find a way to be able to streamline it so we can all freaking analyze it and make money off of it. That's all I'm trying to do right now, right? And that's what they're trying to do. Exactly. You see, there's some parallels here.
Is that any patient-facing model, any direct-to-consumer model, which tends to be where the foundational models aim, is highly complementary to what we do. Remember, what we do is we use AI and data to make physicians better. We are a clinician-facing product, and we absolutely are able to do that because we sit so deeply within the care stack as a payer. So that's where we want to sit. Don't get me wrong. There's great things you can do with direct-to-patient, and we think about those things all the time. But is our core DNA direct-to-consumer? No, our core DNA is direct-to-clinician, and that is the main thing we think about our tool. So a lot of these offerings actually are things we could roll out that supplement the Assistant platform. It is not something that we necessarily are overlapping with our investments.
Great. Are there any questions from the audience before we keep pushing on the telecast? Great. So on the AI topic, many healthcare AI tools are still in pilot phases or limited deployment. You've shown Clover Assistant operating at scale across a wide network of PPOs. What have you learned from deploying AI in real clinical environments that others may be underestimating or misunderstanding?
Yeah, so we talk about AI a lot. I was at Google before this, and I was in the cloud team. We talked about AI, talked about ML, all those kinds of things. The key thing that I think is really interesting that I love about being at Clover, about how we approach this at Clover, is that we are focused on the results of AI. Others talk a lot about AI. And don't get me wrong, like I think they're very focused on delivering stuff. That's great stuff that's happening. But we are focused on making people's lives better. We are focused on that earlier diagnosis. Our papers are about, was there an earlier diagnosis? Did something happen? It's not academic. Did something literally happen? Our data is not based on model results or predictions or.
I love that. It's not academic. Thank you, Andrew. Yeah, academic is a bunch of circle jerking. Give me the outcomes. Give me the freaking outcomes, right? Academic is, well, I went to this theoretical. No, we want outcomes. We want things that can actually impact patient lives. That's what we want. Thank you, Andrew Toy. I appreciate you, right? Thank you. Excellent.
Or sandbox results. They're based upon when an actual doctor, not employed by us in the wide network, used our tools, our software, our capabilities. Did someone's life get better? And I think the answer is yes, that is what's happening. That's very exciting. And that drives the business of total cost of care. That drives clinical outcomes. And so when we go out and we talk to members, remember I said earlier, we don't say, hey, don't you want AI? Very few people say, I want AI. Seniors are saying, I want to feel better in my health. I want to live longer. I want to be able to do more things. I want affordable healthcare, right? I want more access to healthcare. All of our AI capabilities drive our ability to offer them what they want. Affordability, access, better outcomes. When we talk to physicians, they don't say, I wish I had more AI. Some of them do, but the majority do not. What they say is, I wish you could just have more information about my patient more quickly. We can give them that. I wish there was a simple way for me to know what I need to look at before I treat this particular patient in this encounter. We can give them that. I wish there was a more clinical approach to like sort of engaging with the care plan and thinking about how this person is being managed. We can give them that. Right? And so the interesting about what I think we've learned is that AI is critical as something that can be delivered, so that can be used to deliver things that clinicians want and that what patients want, but rarely is AI what they are asking for in and of itself. That tends to be like a VC thing, or like we think about it here at conferences like this, but we are using AI every day. We are using the data every day to drive performance in ways that doctors care about, in ways that patients care about.
Then seems like we have a question in the audience, so I think this will be the last one.
Yes.
Yeah, great presentation. I'm wondering all the great things you're talking about, how are people learning about this at the point when they're purchasing, deciding which plan to enroll in AEP, especially how you differentiate, if you have $0 premiums, so many MA plans have $0 premiums, how are they choosing Clover?
Yes, great question. So at that point, $0 premiums, I think, is a little bit table stakes right now. So thank you for framing it that way. Yeah, table stakes. Next, I think people do look at not just they're sophisticated buyers to look at copays and co-insurance. So what they'll look at, number one, is premium, right? Then they'll look at PPO versus HMO. And I think a lot of them know because their doctors kind of tell them, they're like, hey, be careful of those HMOs. You might not be able to see me anymore and stuff. So then they look to try and get a PPO. So then the next behind that, and a lot of people pull back from PPO, don't get me wrong, this year. Then they will look at the actual copay and co-insurance, because a lot of PPOs, they might be a PPO. You might be able to see the doctor, but it might be like a $10 copay in network and like a 30% co-insurance out of network. And so they'll look at that and estimate how much it actually costs. And so what I think you'll see in our plans, because I talked about accessibility, it's so important, is that we try and keep those costs very, very manageable for people. We're not trying to sort of smuggle them into the in-network. We're trying to actually improve the whole network, if that makes sense. And so I think that's what they're shopping on. We tend to talk a lot about supplemental benefits. I think that is important to people. Don't get, but that's also moving into a little bit of table stakes these days in our markets anyway, right? They're just looking for the usual, the gym memberships, like an OTC card. Those are, again, in the table stakes range. I think we're out of time, so I appreciate it. Thank you for the question. Thank you for that. And thank you to everyone for your interest in Clover. Thanks all.
Exactly. It's like, thank you for your time. We're out of time. You want to go ahead and learn more about Clover, you can go to our website, right? You can go ahead, open up your little, investment app. You can go ahead and freaking buy some freaking stock, right? And send that mother effort to the freaking intrinsic value floors, okay? All right, that's it. Excellent discussion, guys. This was really great. The thesis is playing out, right? And you know what? We did it with class. We worked hard, right? We put God first each and every day, right? We did a good job, and we did it the right way, right? Right? We found a good company. We put in the work, right? Right? And we're going to have a bunch of table stakes, right? Not just for me and you, right? But for our dogs, for B-Rob's dogs, right? And even for my freaking cat, right? We're going to have table stakes, right? We're going to be eating that caviar on that table. Actually, that's disgusting. I don't like caviar, right? Only certain types of caviar, right? With some champagne, right? So I can feel like Drake, right? But, there's a lot of cholesterol. Anywho, the point is this thing is about to basically get to its triple dragon, and I'm very excited. This is very exciting times, ladies and gentlemen. I'm very excited. We already talked about the triple dragons with Dave, and saw what happened to Dave. This is mathematics. This is like math. We're using math, and the problem is we don't have the power to search every triple dragon in the world, but we can use the computer. We can use AI to basically make it our BITCH, and essentially be able to go in and just have it just go in and search and work for us like an employee, and just go search and go find me so the gems. It's going to come and it's going to give you some messed up gems, but somewhere in those stocks there's going to be gold. You're going to look for a double dragon, and it hasn't even gotten to a triple dragon yet, and they're going to look at that and be like, ooh, I see you, right? And that's going to be amazing. Okay. Let me go ahead and go to the comment sections here real quick. I'm a bit behind. What's up, Al? Ben slammed with corporate America stuff. A great, video today. We'll replay on the plane. Hope all is well. Yes, fly safe. No, this was a wonderful video. I'm very excited. Excellent presentation by Andrew Toy. I've heard SAS. Al's got the, oh my, you know how many times he said AI. I'm honestly, if I play, there's a little parrot outside. If I played this Andrew Toy video, but next to this parrot, I guarantee you that parrot's going to be saying AI, right? Right. Which stadium is going to be the Cloverfield? Oh man, it's gonna be the Al Stock Trades Stadium, right? It'll be like I'm gonna call Al Clover Trades, right? No, I'm just kidding, right? Al comment on the Andrew cryptic language top of premium, yes, and risk bearing. Isn't this the hidden release of who counterpart? I think so. Again, I guess they want to be an anime. I don't know why they can't say it, but the numbers will come. Yeah. Market is watching Q1 and then they will come. Absolutely. Hell yeah. This makes me want to buy more of this stock if it may affect the most who listen. Yeah, no. This is a very big deal. It's a change in tone. You're starting to see the progression of how a company goes from, negative to positive free cash flow to positive EBITDA, then to positive net income. This is a wonderful opportunity to learn from this educational platform. Absolutely. Employee, awesome. Hell yeah. I'll be buying. All right. But always, again, guys, always remember this. Sometimes the thesis will take, sometimes it can take 5-10 years to play out, right? So just understand, you have to be patient. Remember, always be stoic, like Marcus Aurelius. Read the book Meditations, right? In the stock market, it can be irrational longer than you can become solvent, number one. Number two, money gets transferred from the impatient to the patient. Number three, Dr. Burry actually sold out of GameStop before it exploded. But the thing is, there was no intrinsic value or somewhat to it, but he just gave up on it, and he kind of he's like, whatever. But remember, guys, a lot of Peter Thiel sold Facebook too early, right? Even Peter Thiel did. SoftBank CEO, he sold Nvidia too early, and he beats himself to it, right? People make these mistakes. Yeah. Patience. Exactly. Just sold 2,000 shares of Nvidia CLOV Stock. Oh, Jim to him. Let's go. Right. And then, this stock is, yep. All right. Rafiki's getting freaky. But yeah, guys, no, this is great. I'm very excited for the future. Just wanted to let very quickly for folks that are there, the sale will be ending soon. Take advantage of our New Year sale. Take advantage. Coupon code New Year. I'm telling you guys, I'm building a product for the future. Okay, let me tell you something. Rule number one: I'm a physician. Do no harm. Look at all my lifetime access members, right? Ask them, has he ever hurt me? Is this a scam? Has he scammed me? Rule number one, do no harm. I not only practice this with my patients, I practice it with my lifetime access members. Do no harm. The most beautiful thing, if you have a child who's 5 years old, what is your goal in life? And if my child said, do no harm, I would cry because I've done my job. Do no harm. That is my mission, right? And that's what I put in this platform. I put my heart and soul in this platform. This platform is lifetime access. You'll be able to take this platform and give it to your children. This is the power of this platform. I want this platform to stay for generational wealth. And I hope that, your children can give me better insights in the future, and we can grow it even more. This is different. Nothing like this has ever been created because people don't care. But what is my goal? Do no harm. God bless you all, and I'll see you on the next one.
Albert Allen's got the secrets in his hand. Retail heroes taking over this land. Trading stocks with a master plan. Fortunes rising on the Clover brand. Numbers rolling, deals never stop. Bulls are charging, markets gonna pop. Albert's wisdom higher than the top. With Clover Health, we'll hit the jackpot. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Stocks are climbing, reaching for the skies. Albert's insights cutting through the lies. Retail dreams standing tall, they rise. In this world of trades, we're the prize. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong.